Hello, thank you so much for that introduction. My name is Hoansoo from Exabits. Very pleased and grateful to be here. So today, before just diving right into the introduction of our company and just promoting what we do, I want to begin with a big question that I think everyone here in the audience cares about, and kind of share our observations as a participant in the industry, what we see as challenges and opportunities, and use that as a motivation to give an introduction and talk about our mission. So the big question that especially recently that everyone's asking is, are we in an AI bubble? And I'm sure most of you have been following the markets, and this particular month of November has not been very nice for AI investors, right? So US equity markets and globally have had some of the worst drawdowns since April of this year when the Trump administration announced tariffs. And a lot of the fear is just based on a whole lot of what we see, what investors are seeing as this gigantic capital spend by these large tech companies, and what appears to be this astronomical growth in data center capacity build-outs. So the graph that you see on the top right is the US data center build-out status by year of construction or planning in gigawatts of capacity. And you can see that growth has really been astronomical in the past couple of years. And then when you look at capital expenditures of the four big companies, Amazon, Microsoft, Alphabet, and Meta, they collectively on a quarterly basis have now exceeded $100 billion in CapEx. And you might wonder, well, that's because the sales have really gone up, so CapEx has to keep up. But even when normalized for sales, there's been this observable uptick in AI spending. Now, if you've taken Econ 101, kind of seeing a lot of this focus around the supply of compute, what might be your question to really assess whether or not we're in a bubble? And the answer to that is, of course, we have to follow the demand, right? So what is the world projecting and estimating to be demand to be in the next 5-10 years? So capital expenditure, by definition, is a large expense a company makes that has to be amortized over several years to produce revenue. So one very rough back-of-the-envelope estimate to gauge whether or not CapEx is really outpacing demand is you look at the estimated, the projected revenue in the next 5 to 10 years. So one way to do this is you look at a 5-year forward estimate of revenues and compare that number against a 5-year trailing backward estimate of average CapEx. And by looking at the ratio of the two and comparing that against what we see as the observed gross profit margin of a good example company like CoreWeave, you can get a sense of whether or not CapEx spend is really running amok and has really gone beyond an excess of what's projected in terms of revenue. And when you look at these numbers, they're actually quite not bad. They're not that bad. So if we're going by the projections of demand, and if we believe those estimates still stand on firm ground, we shouldn't really be too alarmed. Another way to look at this is you look at just the ChatGPT adoption of weekly active users, which is a great proxy for how the end user fundamental growth is keeping up in terms of demand. And just this year alone, their user base has more than doubled, which is a higher rate than what they experienced last year. So in terms of the end users adoption rate, which again is a proxy for the users' willingness to pay a premium, and remember, OpenAI increased their subscription fee substantially this year. But despite that, we haven't seen any slowdown, and if anything, there's been an acceleration in demand. Another way to assess the situation is if there is an excess capacity of data centers that's outpacing demand, you would expect the utilization rates at these data centers to start declining. But given the projections, we actually see utilization rates continue to climb until just around 2027, and even with a bit of decline, most market analysts believe that by 2030, the utilization rate will be just around where we are today. Okay, but let's say you're Michael Burry, and you made a ton of money by shorting the real estate market back in 2008, and you see there are echoes of bubbles now. So one might say, what about circular financing, right? So collusive big tech to inflate profits and prop up AI demand may be an easy or a popular narrative, but I think the questions we should really ask ourselves very carefully are, who are the customers? Who are the qualified or potential customers that have the deep enough pockets and a large enough scale of user base to deploy AI products and services in a bid to build an AGI? Who are the developers and owners? Who actually own and are looking to plan and building out data centers? Who are the operators of these assets once they're built? Who will provide the financing? And what are the big risk factors of large AI DC assets? So here's our observations. So first, on the demand side, demand is incredibly concentrated. So those large hyperscaler data center buildouts that you see on the headlines, they really do represent the vast majority, or nearly 99% of all the offtake of these gigantic projects. No one else. Because as you saw in the capital spend, these AI assets are incredibly expensive. Okay? So we estimate that to outfit just 100 megawatt of power offtake, just using chip equipment, the capex necessary for that is around $1.5 billion. And you hear about these hyperscalers building out in the tunes of gigawatt of capacity. And these chip assets, they have a depreciation life of just around 5 years. And there's a technology refresh that happens every 18 to 24 months, which really puts a ton of pressure in making sure those really expensive assets are utilized to the fullest extent. And the third observation is a lot of the developers, so in the US, data centers are seen as a sub-asset class of commercial real estate. So the commercial real estate guys who are used to having tenants, landlord relationships, and operations of large buildings, they're the ones that are getting into the space with all the enthusiasm in the world to own and operate data centers. And so there's really a lack of skilled labor and expertise. Fourth is there's this separation of supply chain, labor, and innovation. So amid the rising geopolitical tensions between US and China, it's undeniable that the vast majority of the supply chain and labor still comes from China, whereas the bleeding edge innovation still comes from Silicon Valley. And this is a point that I think is missed a lot in the industry, which is that there's a conflation of disparate industries and business propositions. So the customers versus developers, operators, and financiers, they come from different industrial backgrounds with different business objectives. And the result of all of this is that financing AI compute is exceptionally difficult. Okay? So for asset, you have this customized, short lifespan, very expensive bespoke hardware for just a few customers. And again, if you're a real estate developer, you're used to looking at lease agreements that are very simple in nature, right? You have tenant, landlord, you might have a triple net lease agreement, but on the whole, that agreement is quite simple. But for data centers, you have this suite of very complicated SLAs that have very highly technical specifications. And that makes it incredibly difficult for ordinary banks to have any really standardized underwriting procedures to provide debt capital. You have multiple stakeholders with disparate backgrounds and objectives. I just mentioned this. So customers, you have the big tech companies that are looking to build out and increase our equity based on AGI competition. You have developers, real estate developers mostly, looking for cash flow so that they can secure leverage on financing. And you have operators that come from traditional cloud environments, and many of them also come from mining, crypto mining. And the financiers are, of course, always looking to minimize risk without really having the technical expertise of how to evaluate a lot of these business propositions. What kind of financing is available? So equity versus debt, right? So equity, by definition, most of the value comes from the discounted expected future cash flow that presumably has a long duration. But with a 5 years or shorter depreciation life, that's a very difficult one, and also with a very high cost of capital, because a lot of the equity attached to AIDCs, they're trading at a very high multiples in the markets. So debt financing is really usually the capital structure of choice that most are after. But bond markets are accessible only to the biggest investment grade public firms. And then everyone else, they have to resort to going into private credit. And private credit is a very fragmented market that is not highly competitive. And so the interest rates end up being somewhere between low to mid teens, and that can easily wipe out an already very tight gross profit margins. So this is our approach to the challenge. We build modular data centers that are designed to minimize on-site labor and accelerate deployment. And here the key is we want to make scale build-out incremental and transition away from highly rigid traditional data center assets into something that's much more agile. And to become a leader in building compute as a real-world asset, allowing investors to participate in GPU cluster rent yield and growth, and to really bring liquidity to the marketplace for compute financing. So this brings attention to our dual mission at Exabits, which is to become the next generation AI cloud infrastructure provider, and to be a leading blockchain-based compute crowdfunding platform. So most of our investors, they like to simplify all of this by looking at us as a combination of CoreWeave and Figure lending, albeit we focus more on the long tail customers. And here's a quick video.
At Exabits, we understand that AI is changing everything. From self-driving cars to medical breakthroughs, the future is built on artificial intelligence. But AI runs on compute power, and right now, there's a problem. There isn't enough of it. GPUs are the engines of AI, but on their own, they're just raw power, unrefined, fragmented, and inefficiently allocated. It's like crude oil before it's turned into fuel. There's potential, but it's not usable yet. Right now, AI companies, researchers, and developers struggle to access compute power. Traditional cloud providers are centralized, expensive, and exclusive. Meanwhile, decentralized GPU marketplaces are unreliable and inefficient. This bottleneck is slowing down AI innovation at a time when AI needs to move faster than ever. That's where Exabits comes in. Exabits acts as a refinery for AI compute, taking raw GPU power and transforming it into enterprise-grade, AI-ready compute clusters that are optimized, scalable, and ready for deployment. Think of Exabits as the base layer of AI compute. We don't just provide GPU time, we process, optimize, and distribute high-performance AI compute to power the entire industry. This means AI companies, researchers, and developers get faster, more efficient access to compute without dealing with fragmented supply chains or unreliable resources. Exabits isn't just another GPU marketplace. We are the foundation that powers them. Whether it's AI research, cloud computing, or Web3 applications, Exabits provides the optimized, enterprise-grade compute power that industries need to scale. That's why GPU marketplaces and AI enterprises rely on Exabits to supply their compute needs. We are positioned at the base layer of this industry. That means, as AI demand grows, Exabits grows with it. The future of AI isn't just about using compute. It's about owning the infrastructure that powers it. Exabits is financializing AI compute, turning GPU power into an investable, yield-generating asset. Whether you're a developer, investor, or enterprise, Exabits gives you a way to participate in the AI revolution, not just as a user, but as an owner of the most valuable resource in the digital world, compute power. Join Exabits today and be part of the next evolution of AI compute.
Great. That's actually the last slide that I have for today, so any questions? I'd like to welcome them. Thank you.